In today's video, we're going to be talking about the things that people don't tell you when you're purchasing your first home. So all you first-time home buyers out there, make sure you tune into the end of the video, take some notes, because I'm going to be dropping some nuggets here that hopefully can help you navigate your first purchase and become a homeowner. If this is the first time you're checking out our YouTube channel, thanks so much for scrolling by. I appreciate you tuning in. We talk about everything about mortgage finance, real estate, investing, and if you're thinking about relocating here to Las Vegas, this channel has got you covered. We show you all the different neighborhoods and ways that we can help you with your financing and help you get into a home and call Las Vegas your new home. So I appreciate you guys watching. As always, just like we always ask you guys to share the love, hit the bell, subscribe to our channel so that every week when we drop new content, you get notified. And we always appreciate your comments and love that you guys show us out there. So let's hop into today's video. So like I said, we're gonna be talking about the things that no one tells you when you're buying your first house. So one of the first things that people don't tell you about buying your first house is getting qualified and getting pre-approved first. I know it's super easy to get really excited thinking about your first purchase. You wanna run out, go look at some homes. You're probably looking on Redfin every night or Zillow or any of these online websites, and you can see yourself moving to this beautiful new home and you really wanna run out and go look at the property. So you might make a few calls to some realtors, or if you're on their websites, they're probably bombarding your phone, trying to get you to call them back or to go look at this house. But the first thing that you have to do in the buying process is get qualified. This is the most important part of the entire buying process, because this is where your lender is going to tell you what you qualify for. They're going to be able to give you some options in terms of down payment options, whether you're using FHA or conventional financing, whether you're putting 5%, 10% down, or in some parts of the country, there are down payment assistance programs where you can actually get your entire down payment covered for you. So meeting with the lender is the most important thing that you have to do first before you start looking at property. And with my team, when we do pre-approvals, we like to make sure we give you several options if they're available, because we want to show you how your money works. How does down payment options work? So that way you have a really good understanding of what your payment's going to be, how much money you need to save, and how much money you may need to come to the table with in order to get your offer accepted and purchase your first home. So don't skip over the pre-approval process. That's number one on the list. Now that actually takes us into number two. How do you find a lender? More often than not, people are searching online. They're going to websites like LendingTree and probably Googling, best mortgage lender and seeing who comes up top of the list. Now, the mistake that everyone makes, or that a lot of people make, is that they decide on a good mortgage lender by their interest rate. Now, interest rates change every single day. And the way the market's been recently, rates are changing multiple times throughout the day. If you are price shopping lenders, you have to literally do that within a matter of hours. If you're looking at rates that got quoted to you from a week ago, those rates are no good. The market's changing so quickly, you literally have to be able to rate shop and decide who you're gonna work with and lock your interest rate all within that time frame. So I feel like the mistake that a lot of people make when shopping for a lender is simply asking that question: what's your interest rate? And then deciding, hey, who's got the best deal? And that's where they're going with. And why I feel that's a big mistake is because you're not considering your mortgage options. Anybody can give you a low interest rate, right? Any lender can charge you points, multiple points to get a low rate, but are they gonna tell you that up front? And since you're a first-time home buyer, you probably don't even know what points are, right? So they can easily get something by you without you catching it, and then you're not gonna find out until the 11th hour when you're about to close your deal, and then you're finding out that you're getting charged an extra, $2,000, $3,000, $4,000 depending on your loan amount in order to close your house. Now, you got so excited that, hey, I found Johnny with ABC Mortgage who's gonna give me a 2% interest rate, but you didn't know the questions to ask. And that's why I always reinforce that to our clients and to a lot of you that have been watching our videos, is that asking the lender what their interest rate is not necessarily the best way to go about finding a lender. So in my opinion, what you need to ask them is, can they close on time? And you want to do some due diligence on your part. If you are talking to a local lender, look them up online. What kind of reviews do they have on Zillow? Did you know that you could go to Zillow and they actually have a section on their page that you can look up mortgage lenders in town, and they also rank them by the number of reviews that they've got. And you can see how active they are, how many deals they're doing. So that's a good way to be able to verify, hey, is this guy that I'm going to work with, are they great at what they do? Are they going to return my phone call? Are they going to take the time to answer my questions? Being a first-time home buyer, you're going to have tons of questions. You need somebody that's going to be there by your side, answer those questions, respond in a timely manner, and close your deal on time. Because it doesn't matter if you get a 1% interest rate. If that guy can't close your deal, guess what? You're SOL, man. You're going to lose. You have the potential of losing your earnest money, the money you paid for your appraisal, and all your other inspections that you might have spent if that deal doesn't close and it ends up falling apart. And next up on our list, I want to talk about down payments, because here's one thing that not a lot of people tell you is that there's actually so many low down payment options available. There's still this huge myth out there that you have to put 20% down in order to purchase a home. If you're a veteran and you qualify for the VA loan, that's zero down. That's no money out of your pocket. If you qualify for any sort of local community down payment assistance programs, again, we have programs here in Las Vegas that can cover your entire down payment for you to purchase a home. FHA financing, it's 3.5% down. USDA financing, again, it's 100%. So all these options are available out there, but yet so many people will actually think that they have to put 20% down in order to purchase a home. Now, you may ask, why 20%? And usually the rule of thumb is if you put 20% down, there is no mortgage insurance on your home loan. So you have your principal, your interest, your property taxes, and your homeowner's insurance. And traditionally, if you put less than 20% down, you are going to have mortgage insurance on your house. However, going back to my point about working with a good lender that can give you options, they will show you how to best use your down payment funds. I've had clients that have come to us saying we want to put 20% down, but they didn't know that we could do the deal with maybe 5 or 10% down. And then we have options to where we can finance the MI, or we have other mortgage insurance options, so you don't have to pay on a monthly mortgage insurance premium. So in terms of your down payment, do some research. Talk to your lender, ask them for options, right? If you have the ability to put money down, make sure that they can show you several ways that you can structure your deal, whether it's 10, 15, 20% down. There's a lot of ways that you can do it. And again, if your lender has the experience, they know how to work and structure your mortgage insurance. So that way maybe they could actually save you some money into purchasing your home, and then you can put that money towards your renovations. And another thing that is not really mentioned is what actually makes up your mortgage payment, right? So you buy this house and you're making this $1,000 payment, $2,000 payment. What is all that comprised of that actually ends up being your mortgage payment at the end of the day? So I just actually kind of mentioned this just a little bit ago, but your mortgage payment is the principal and interest, and then you have your property taxes and your homeowner's insurance that's usually coupled into one payment. Now, the taxes and insurance is what we call an escrow account. So if you're talking to your lender, you can actually you can ask them to pay your taxes and insurance separately. It's a lot easier to send one payment every month that the mortgage servicer who's taking in your payments then disperses money to the county to pay your property taxes and as well to pay your homeowner's insurance. Again, we do have some clients that pay that separately. Totally up to you if you want to do that, but check with your lender, because sometimes when you don't have an escrow account, they do charge you some extra fees to do that. So just make sure you run that by your lender, whoever you're talking to, and they can obviously give you the difference if there is going to be a difference in pricing. So that payment right there in mortgage lingo terms is what we call PITI. So you have your principal, your interest, your taxes, and your insurance. Now, certain parts of the country, you also have your HOA. Like here in Las Vegas, a lot of our houses and our communities, they're within HOAs. Now, the HOA isn't going to be coupled with the entire PITI payment, but that's going to be something that's going to be in addition to. So depending on the community you live in, depending on the amenities that are within the neighborhood, are you in a master plan community? Is it a brand new community where you also have additional taxes, like here in Vegas, it's called a SID or LID, which is a special improvement district tax. So all the new homeowners that are buying in these brand new communities, they have to pay extra taxes. Again, all these numbers add up to what we have to look at as a mortgage lender to qualify you. So it's very important that if you're not working with a local lender, or you're not working with a lender who's familiar with the market, or maybe they just don't do a lot of business, so they're going to miss these types of things and these types of questions to ask you what you're purchasing. Because if, let's say, you had an HOA and your lender didn't factor that into qualifying you, and let's say that extra $50 to $75 a month is more than what you can qualify for, that could literally kill your deal, and you're going to be, having to find another house, and hopefully you're not going to lose any earnest money or anything like that. So again, just be careful if you're purchasing in a neighborhood that has HOAs, because those numbers have to get factored into your PITI payment for the lender to then fully qualify you for your mortgage. And next up on our list is what you actually qualify for. So what you actually qualify for is not what you need to spend. A lot of people think that if you go to a lender and they qualify you, let's just say for $300,000, that you have to spend $300,000. Or another misconception is, if you get qualified for $300,000 and let's say you find a house for $250,000. Now, some people think that, hey, I've got an extra $50,000 that I got approved for. Can I get that money back to spend it on renovations or furniture or anything like that? And unfortunately, the answer is no. Now, we qualify you up to that $300,000 sales price. That means you can purchase up to that amount. And if you found a home for $250,000, that's all the lender's going to qualify you and actually move forward to provide you financing on. Now, if you did find a house that needed some renovation work, yes, there are programs out there that you can utilize with lenders that know how to do renovation financing, to where you can go in and replace your windows, your countertops, your floors. You can repaint the house. So again, back to my point about having options. It's not always about the interest rate, especially in today's market, because it's super competitive. There's not a lot of inventory out there. So renovation financing is going to be something that an experienced lender can actually educate you on and walk you through that process to maybe help you with your entire home search. And another thing I want to point out, like I just talked about renovation financing, is you actually can purchase a home and include your renovation costs into your mortgage. That's another thing that a lot of people don't understand, because they feel that once they purchase a house, they have to buy it as is, or the seller's not going to make any repairs. And more often than not, you're spending a lot of money, right? This is your first house. You don't have a lot of extra money saved up to renovate or to buy furniture and all that other stuff. So what do? You end up going to Lowe's or Home Depot, and they sell you on getting all this renovation work, and you get the 12-month no interest or 18-month no interest credit card. And I can tell you, I've been doing this for 15 years. You know how many people actually pay that credit card off? Very, very little. They end up creating all this extra debt that now they have to work on paying down again. So a lot of them, what they'll end up doing in the future is coming back and trying to refinance if they weren't able to qualify for renovation financing up front. So if you're having a tough time finding a house today, I would talk to your lender to see if you could qualify for a renovation loan. That's one of the most underutilized loan programs that are out there. Not a lot of even real estate agents know what renovation financing is. So talk to your lender, see if that's available for you if you're having a hard time finding a house, because you might find an amazing home where you love the bones of it. You just hate the fact that maybe the last homeowner had blue carpet, or maybe, you know what, the house just looks dated. You got to replace the cabinets and the countertops. You can do all of that with renovation financing. So if all you HD TV lovers out there, that's going to be the program for you, because now you can literally be the star of your own renovation show. All right, we're getting down to the end of the list here. So I hope you guys are enjoying this video. And if you have specific questions, drop that in the comments below or send me a text, send me a DM. I'd love to be able to help you and answer your specific questions. If you don't want to talk about it in front of everybody, but I love hearing from you guys. And if you got any friends or family that are thinking about purchasing, forward them this video, share the link, and that way they have a good idea of the things to avoid and maybe some things they didn't even know about purchasing their first house. So let's keep moving and we'll get this list wrapped up for you guys. The next thing I want to talk about is your funds to close. Now, here in Vegas, a lot of people work in the casinos or they work in industries where they get tip money. Now, the problem is you can't source cash, right? So I've had clients in the past that they're like, yeah, I've got $20,000 for a down payment. And then when we get their bank statement, it's got $2,000 in there. We're like, well, where's the 20,000? Oh, it's in a safe in my house. The thing that nobody tells you about when buying your first house is that your lender has to be able to verify your down payment money. So if you're one of those people that don't believe in banks, and I still talk to people that believe that today, that's fine. You have to create a bank account. Your money has to sit in the account for at least 2 months in order for the lender to have it seasoned, and we know that that's your money. Now, you are allowed to get gifts in certain circumstances. So your family member, if mom or dad or your brother wants to gift you some money towards your down payment, you can certainly do that. Again, have that conversation with your lender. The more openly that you can communicate with your lender, the better. Don't hide things from us, because when we find out, it could literally be detrimental to your loan. You could not qualify. We're not here to be, snooping around in your private business. We're here to make sure that when you want to purchase a home, that we do our job and we get that loan done for you guys. So if you have questions about your money, where it's coming from or how to structure this so that way we can get around some of these issues that come up with sourcing funds, because you got to remember, right? We're dealing with hundreds of thousands of dollars. Guys were doing fraud left and right back in the day, and that's what caused this housing crisis. So we don't want to go down that path again. So that's why underwriters and loan officers, we're going to do our job up front. We're going to make sure that those funds are yours, right? You're not doing any sort of money laundering or there's fraud that you've taken someone's identity. So when we ask questions, again, it's not to be nosy. We want to make sure that, hey, we're not going to have any issues down the road once you do find a house when it comes to getting your loan approved and being able to source your down payment money. So there you have it. Those were some of the top things that I could think about today to share with you guys of things that people do not tell you when you're purchasing your first home. I could probably go on for another 30 minutes, but I don't want to bore you guys. But I will maybe drop another video in the future that we can share about more things to be concerned about when you are purchasing your home. And again, if you guys have specific questions, drop that in the comments, hit me up. I'd love to hear from you guys and help you structure your deals properly so you don't have any problems in the future. And as always, I appreciate you guys watching, and I'll see you on the next one.